Crude oil prices fell below $50 a barrel on January 6, 2015, the lowest since 2008. How will this latest development change the world? Bloomberg reports that some analysts predict crude oil prices will continue to weaken in the first half of 2015 and that the price is likely to fall below $40 a barrel. Analysts warn that if the oil price does hover at the $40 level, the market panic may expand, leading to a further drop to as low as $30 a barrel. In this case, the biggest losers will be the crude oil exporters, including Saudi Arabia, the United Arab Emirates, Norway, Russia, and Malaysia. Among them, all eyes are on Russia. The value of the ruble has fallen to its lowest level since 1998, and if the oil price continues to drop to $40 a barrel, this country's economy is expected to shrink a further 2.5%. Meanwhile, Malaysia is listed as the number 5 loser in this chart, where the country's economy is expected to shrink by 1.5%. As shown in this chart by the analyst, if the oil prices drop to the level of $40 a barrel, countries and places such as Hong Kong and the Philippines will be the biggest gainers. The Philippine economy is predicted within the next 2 years to grow by 7.6%. However, economists worry that such a sharp drop in oil prices may also trigger a global recession. The Eurozone is predicted to be the first to suffer from a deflation, while the economies of UK and Japan are likely to remain stagnant. Meanwhile, the impact of the oil price drop is mixed for the United States. Economists expect strong demand from consumer markets will neutralize the losses that is made by the oil and gas industry. The economic outlook for the United States is generally positive for 2015. From the political perspective, 2015 will be a rough year for leaders of oil-exporting countries. Shrinking national income and tight budgets often also bring about political turmoils. Byron Wien, a Blackstone Group LP vice chairperson, predicts that the Russian President Vladimir Putin will resign in 2015 and Iran will agree to stop its nuclear program. Venezuela, which relies on oil for 95% of its export revenue, risks insolvency, Jefferies LLC said in a January 6 release.